Hello, Maverick traders. Welcome out to your market roundup, February 26th. Corey here with you. We're going to take a look at markets from a top-down approach. Any meaningful news out there? I think we've spotted something significant. We'll highlight that today. We'll take a look at sectors, where money's rotating, and then as always, highlight some bullish, some neutral, some bearish, and we've got a little bit of all of that for you today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So I think what's interesting about the markets right now is the phase that we're in. We've been talking about this blow off top, this exhaustion high rally, and I think we're getting just to that point. So the Dow, the S&P, the Nasdaq, they're all flat on the day, and you say, well, what was significant about today? Well, oil continues to be the outperformer of late, up 1.5%, but more to the point is what happened below the surface. Look at the chart recently of NVIDIA. Huge explosive rally, and look at the volume and look at the explosion here at the tail end. No story has been bigger than NVIDIA. This has been the driver of, I would say, emotion, of fear, of greed, of missing out. Look at Berkshire Hathaway, about as steady Eddie as it comes. Warren Buffett's corporation. Look at today, huge gap higher on the back of its weekend earnings announcement, but then the exhaustion. That was probably a gap higher where short sellers just threw in the towel, said enough's enough, too much pain, and the market has a way of finding your pain point. Those people gave up. It was that final influx of buyers, and then it gave all those gains back and finished down on the day. And again, on heavy volume. These are the things we see at market tops. So maybe the S&P isn't going to give that huge exhaustion high, but maybe it's the critical components that have been driving the rally that will do just that. And I think that's what we're seeing. JP Morgan CEO Jamie Dimon says, I'm cautious about everything. A long way to go before we have a true soft landing. Advanced decline line, 54% of stocks going down today, so about half and half. The 50-day moving average, look, we still have more stocks above the 50 than below, but just barely, and it's given ground again. So I think we're starting to see that rotation, that rollover in equities. Now you look at this chart and you say, well, Corey, can I really be bearish? Well, probably not outright bearish, but certainly less bullish if you believe, and depending on how you score the markets, we've been in this nice channel to the upside. We've been up at the top end of the range. And I think not only are we going to the bottom, I think we're going to correct a little further than that would be my expectation. You look at the NASDAQ, we really kind of gapped up, back up to these highs. And notice how we just peeked our head through there, almost like a false breakout. We just spiked above, trigger some stops, and then come right back below. From false moves come fast moves. I think things could get pretty quick to the downside. The initial surge of profit taking. Now, I'm not calling for a crash or even a bear market or anything like that, but could you back and fill an easy 5% in a quick period of time within a couple of weeks? Not out of the question at all. And you know I've been steadily bullish. This is a turning point for me, how I see things. You're seeing some rotation. What had been really getting hammered, like Tesla, has started to bounce. These are the way rotations often happen. Google and some of these leadership stocks in the large cap tech now rolling over hard. A stock like Berkshire finishing down 2% after being up multiple percent early. That's very uncommon type of trading in a name like Berkshire Hathaway. So as far as my short-term outlook, I would certainly just scoring the markets. Are we above the 50, above the 20? Yes, but for me, I use a little bit of discretion as one of my key components, and that's just how I do it. And my discretion suggests for the first time in weeks, this is where I want to be skeptical. This is where I want to be a little bit more bearish, and it's one of the inputs. So I can't be outright bearish because, again, the trend's still up and whatnot, but I can get less bullish, and that's where I'm at. Now, if we highlight some bulls, some neutral, some bears, we've got AbbVie and Dix and JP Morgan on the long side, Roblox on the neutral, Apple, Google, Run on the bearish side. Let's look at some charts here. I'm going to start with Dix. Now, we highlighted this one a few weeks back here in the consolidation mode, and you'll notice it, sure enough, it broke out above that resistance and has taken off to the upside. This would be a name where I actually think we could probably see a little bit more before it's done. It's not driven as much. It's not like one of those large cap tech or some of those names. It's sort of like JP Morgan. I feel like there's a couple of areas that had been beaten down and they can continue to outperform, whereas I would be concerned about the Nvidias and others continuing to push higher. I think some of these more quote unquote value type of names can at least exhibit relative strength. So if I were playing this, I'd be very mildly bullish and put on some form of bull call spread or something along those lines. Probably more in the neighborhood of 1 to 1, 1.5 to 1. Not a huge reward, not a huge risk, just kind of targeting maybe a little bit higher. Maybe that it finishes above 177.50 or even 175 here over the next couple of weeks. If I were looking neutral, I think Roblox is interesting. Now, Roblox is probably going to gap down slightly tomorrow if tonight's after hours trading holds up. One of its big competitors is Unity. Unity is down right now, so Roblox is trading down in after hours in sympathy, which I like. It comes back down to this gap area, but I don't think it's a big drop or a big pop. This is exactly how consolidations can kind of churn back and forth. Look at the moving averages. So I suspect that over the next couple of weeks, we're going to kind of dance around with this, call it $41 price point. And that's all we need. We need, on a sideways trade, maybe a couple of weeks of sideways. I don't know that it's going to stay sideways for 3, 4, 5, 6, 7 weeks, but for a couple of weeks. It's similar in a way to ConocoPhillips. The week I did our trading collective picks, I picked ConocoPhillips as a sideways. It just finished this past week, and similar type of dynamic, and sure enough it stayed sideways for a couple of weeks. So that's what I would be looking at. And then on the bearish side, something like Google. Notice we've broken a support level and we've done so on volume. Now, here's where I think a lot of people make mistakes. They look at Google and they just see big name company, one of the big techs, it's trading down, it's underperformed so many others like Meta and some of the competitors, Microsoft and such, and they'd say, well, I'm going to buy that. It's beat up, it's down, I'll buy when it's low. Usually, now that might work once, but it won't work most of the time. Usually, something is relatively weak for a good reason, and you're seeing more and more of that today. So I suspect I would do the exact opposite. I'd be more inclined to short something like this and play something like Meta to the upside, or Microsoft maybe to the upside. The relatively strong tend to hold up much better. The ones that are weak, remember, selling begets more selling. This stock is in danger of forced liquidations and a lot of other things that could transpire over the next couple of weeks to continue to push it lower. So over the long term, who knows, but we're short term here looking at it as a trade, and as a trade looks like it's vulnerable for more downside. How about Sunrun? We've just broken to new lows. We broke a key level of support on volume. Again, I wouldn't be massively bearish, but I would certainly target these levels or something lower. Some sort of bear call, bear put spread, something along those lines makes sense as just, hey, trade the trend, trade the momentum. We broke down on volume. usually those things continue to grind lower and lower. So I think the markets are in at least a short-term blow-off top phase. We've had this perfect Goldilocks scenario where we had inflation coming down, we had a strong economy, we had companies in good shape, we had all these things, but I think that's kind of coming to an end, and this is where the market starts off 2014 very nicely. We've seen this huge run higher, and this is about where we start to move into troubled waters, and we got to navigate a little bit more carefully going forward. Core PCE out on Thursday. This is the Fed's favorite number for tracking inflation. The Fed, I mean, unless the economy weakens and stocks give away and so on, the Fed's not going to be massively cutting rates this year. So if you think rate cuts are coming, there has to be something that kind of gives ground, and that's where I think we're at. So, could you see interest rate cuts later this year? Yeah. And it probably starts right here with a little bit of a slowdown in the economy and inflation staying sticky high and at a little higher level than they want. AMT, Salesforce, Dell, Hewlett Packard, Lowe's, Monster Energy, Snowflake, and others still reporting earnings this week. Not today, but this week. Hope you enjoyed this market roundup. Have a great week, everyone. We'll see you next time.